Hello, chart watchers, and welcome to this Thursday, June 14th, Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, today we've got the Dow Jones currently down 2 points, the S&P 500 up 8, the NASDAQ just rolling and roaring along up 62 points to a new record high. The Russell 2000, a little bit of consolidation here recently, but it also is up 5 points today, outperforming on a relative basis. The 10-year Treasury yield yesterday got up over 3% right after the Fed announced a quarter-point rate hike, but it did pull back, closing about 297 or so, 298. And today we are seeing it down 2 basis points, currently at 2.95%. Volatility index, after spiking a little bit with the Fed announcement yesterday, is back down to 1209, down 85 or 0.85, 6.5% today. So volatility certainly trying to resume that downtrend that it's been in for the past few months. Utilities leading the market to the upside, but I think it's an oversold bounce, maybe a little bit of a relief rally that the 10-year Treasury yield hasn't spiked on the Fed announcement and their talk of additional hike, one additional hike anyway, later in 2018. Technology also performing well. Nice move up to challenge the recent high set about a week and a half ago. Consumer discretionary, just no let up here to the upside. Although, despite a very strong retail sales report this morning, retail stocks in general are down. So that is not the part of consumer discretionary that's lifting the market. Corvo, QRVO, one of the better performing stocks in the S&P 500. I thought this was an interesting flagpole, followed by a flag. Looks like it's trying to make a breakout, and you can see volume picking up a little bit today. So QRVO looks interesting. On the flip side, though, Oracle was downgraded by JP Morgan based on lost business to Amazon and to Microsoft. And you can see Oracle performing pretty weakly today, down 4%, back down to $46.35. And it is Thursday. Erin, I don't know what your plans are for the weekend, but I got a long weekend coming up. Looking forward to it.
That's right. And no, I mean, my weekend's going to be pretty relaxing. I might see my dad, though, on Sunday, given that it is Father's Day. So I'll have to tell him hello from the Market Watchers Live crew and viewers.
And for Father's Day present, are you going to talk to him about the S&P 500?
I don't know if he'd call that a present.
Anytime you talk
Besides, we do that all the time. That's just natural.
Yeah, I was just kind of making a joke. I'm sure when you get together, even though it is a special day, you're probably still going to be talking about the stock market. That's what I would do.
Always.
But
Always.
anyhow, well, we do have a special guest in here with us today, Bill Shelby from StockCharts from the mothership. How are you doing today, Bill?
Good.
Is it still raining in Seattle? Because I'm not coming out there until it stops.
Yeah, it's last few days have been kind of ugly, but it's supposed to be up into, I think we're breaking 80 on Sunday, so it'll be starting to get pretty nice.
Wow. It's the anticipation of me coming out there because I don't ever see the rain. So
exactly. It's going to take about a month for us to warm this place up for you.
I appreciate that. That's a very good thing. But we do have Bill in for a special presentation today. In the past, Bill, you've done some everything stock charts, just going over a few tools here and there, some hints along the way. But today you're going to go through your personal, your personal flow of how you trade and so forth. I think it'd be really interesting for a lot of folks out there to see how you've created a lot of the stuff or helped create a lot of the tools and so forth at StockCharts. So it'll be interesting to see how you use those tools in your trading. So we're all looking forward to that. So
yeah.
hang in there with us, please. And Erin, I'm going to let you go ahead and take over and go through the announcements, the agenda, and we'll get things going.
Absolutely. Well, tomorrow Tom will be out, so I have Arthur Hill co-hosting with me. I'm very much looking forward to that. I have my workshop on Tuesday, and I'm going to be doing it on the various momentum indicators. So I'm just going to give an intro to the basic ones. Grayson Rose will be in that Wednesday to do a guest spot. So that'll be nice to have him talk about his trading as well. And so Julius, oh my goodness, Julius is on Thursday of next week. So we'll get to have some more RRG with him. He's a super popular guest, Tom. I know everybody looks forward to him coming up.
Yeah, well, I think, too, he kind of focuses in on the relative strength, which just about every guest we've had here talks a lot about relative strength. So I think Julius kind of fits right in there with his RRG charts.
Absolutely. But today, Bill, as we were talking about, will do his personal trading workflow. The 10 and 10 to 1, which will follow. Our first symbol is going to be Etsy. It'll be interesting to look at that one again. Momentum sleepers. And that should be a very interesting segment. I think you guys are going to enjoy that. Well, I'm just going to wait to let you know, but it's going to be an excellent segment. So certainly stick around for that. What kind of technical news do we have out there, Tom?
Well, we got word from the Fed yesterday afternoon. That was a big piece of news there. Everybody was kind of sitting on the edge of their seat on pins and needles, waiting to see what the Fed might say. I kind of speculated yesterday morning. I thought that they might take a look at increasing the number of rate hikes in 2018 from 3 to 4. And that's exactly what they did. They did come through with the quarter-point rate hike, which everyone was expecting that. But they did give a little bit more hawkish kind of a tone in saying that they would likely be raising 4 times this year instead of 3. And that kind of spooked the market a little bit. I think the market handled it pretty well. And you can see with the NASDAQ at another all-time high today. I think that that's a pretty good sign. But economic reports out this morning, initial jobless claims, of course, we get those every Thursday morning, 218,000 versus the expected 225,000. So a little bit of good news there. May retail sales just absolutely blew the doors off. Came in at 0.8%, rose 0.8%. The market was only anticipating 0.4, so really a doubling there. And then if we look at May retail sales, less the autos, they rose 0.9%, and the market only anticipating 0.5%. So really, it was a win-win with initial jobless claims and strong retail sales this morning. April business inventories came in at 10 a.m. Eastern, and they rose 0.3% as expected, so no big deal there. But that move on the retail sales, and you look at the charts, and I'm going to go over that in just a couple minutes, but that was kind of a telling sign. I think the charts have been telling us that we were going to get a strong retail sales report because retail stocks have been on fire in the month of June. But first, let's take a look at utilities. This is the group that is leading today. This is the best performing sector. I think it's just a little bit of a relief rally. It had been selling off for a bit. And of course, right after the Fed announced at 2 o'clock yesterday, we saw the 10-year Treasury yield get up to 3%. And then it fell right back down to about 297, 298 into the close. And today it's down another couple basis points. So I think that's helping provide a little bit of relief in the utilities. I still think the overall downtrend in utilities, the relative weakness that we've been seeing in 2018, I think it's going to continue. I'm not a big fan, but at least in the short term, we are seeing a move back to the upside. And so far, from a positive perspective, I guess, we are holding that early February low on the XLU. And what I see in a bull market, or what I expect to see, what I want to see in a bull market, is participation from all areas of the market, or from most areas of the market. So I'd really like to see XLU hold this 47 level and move up. I just don't think that the relative strength in utilities is going to be there in a interest rate rising environment. And that's what I'm looking for as we go through 2018. The banks, this was probably the biggest surprise to me when I looked at the bank index yesterday. You know, the Fed not only came through with their quarter-point rate hike in the Fed funds rate, but they also announced that there'd be one more rate hike than expected. And when you start getting more news of rate hikes, normally you would expect the banks to do really well. I audited banks when I was in public accounting, and I do know that when rates are on the rise, most banks profit from that. Their net interest margin expands when short-term rates are going up and when long-term rates are going up as well. I was just a little surprised to see that the banks, after being up near 480 and threatening to move to about a 3 or 4 week high, maybe 3-week high, we backed off of that level. We were up over 480 yesterday, came down, closed below 475, and we're seeing more weakness today. I know JP Morgan was having a rough day earlier, and so the bank index right now is down more than 1%. And this is in an environment where the Fed's telling us to expect higher interest rates. So if there was one surprise to me, it was probably just that the banks, which really have not performed as well, at least the bigger banks. And I say that because I'm going to bring up the KRE, which is the regional bank index. And this regional bank ETF, you can see just recently set a new high. And if I go back and we take a look at that bank index again, you're going to see nothing like that. You can see that the big banks are way off of their early January high. And the KRE, on the other hand, let me get it back up here again. The KRE is well above where it was in January. So the regional banks obviously are doing much, much better than some of the large money center banks like JP Morgan and so forth. Let's see, what else do we have here? Well, Oracle downgraded. I'm going to bring up Oracle, and I wanted to take a look at this in the relative chart style that I use, because you can see Oracle is down quite a bit, or was down quite a bit even before today's downgrade. It was down about 10% from the high in March, and yet we've seen many software stocks continuing to break out. So when we pull this up on a relative chart, you can see that, we haven't really done much with Oracle going back over the course of the last year. A year ago, almost a year ago, Oracle had gapped up and was trading up around $50. And here we are a year later, $46. And look at what the software index has done over the course of the last year. We've seen it up probably about 35, 40%. Well, maybe not that much. Let me see, 1550 per 600. Well, yeah, probably about 40%. I mean, that's a pretty good move to the upside on the software group. And so Oracle, relative to the software index, has been lagging badly. So when you get the announcement, well, not really announcement, but the downgrade from JP Morgan that Oracle is losing business to Amazon and to Microsoft, you don't really need the fundamental information. All you really need is the chart. Money's been rotating away from Oracle when you look at software for the last year. So it shouldn't be a shock when you get news that is not particularly favorable. Now, I'm also going to bring up Microsoft here, and I want you to take a look at how Microsoft looks, or even, an Adobe. And Adobe reports tonight, by the way. But here, look at Adobe or Microsoft, what we've done. Back when it was at 67 and change, it's probably up 50% in the last year. Software is up 40%. And as a result, Microsoft is actually outperforming one of the strongest groups in the market right now. Microsoft's a leader, Oracle is not. That's what the market's been telling us. So JP Morgan coming through with that downgrade really is just an after the fact, afterthought, really. Apparel retailers, as I mentioned earlier, many of the retailers, I'm going to pull up the XRT. This is a classic buy on the rumor, sell on the news. Beautiful move up, big breakout. This is the June rally I was talking about, the huge rally we've had in retail stocks. But the last 2 days we've been pulling back. We got a great retail sales report out. And those who are fundamentalists looking at the news and then looking at the XRT probably are shaking their head, because we just had one of the strongest retail reports come out this morning, and the group is down 0.5%. But a lot of it was built in. A lot of it was already anticipated. You've got a lot of Wall Street analysts going out to retail outlets or retail companies around certainly around the U.S., and they're getting kind of, I'm not going to say insider information, because it's really not. Analysts can go out and talk to companies about their business prospects and so forth, but they're getting this information. They're coming back into their firms, and these companies are buying for themselves and for some of their customers. So that's what, as you see this move up, you see the heavy volume coming in. A lot of this is built in. The market is anticipating these strong results. Then we get the results, and you start to see the selling. Doesn't really make sense from a fundamental perspective, but it makes perfect sense from a technical perspective. TLRD, this is an interesting stock today because they reported better than expected revenues, better than expected bottom line EPS, and they reaffirmed their guidance. I didn't see anything negative in this report. Stock's down 21.5%. Now, again, it's had a huge run up, and anybody who's looking at the report can't understand why it's down. But I was looking at the weekly chart, and it looked like finally we might be getting a test of price support. You can see the top in December of 2016, another top in January of 2018. We broke out above that level and literally pulling back to a key support level. If there's one negative here, actually two negatives, it's that the breakout above 25 came on just kind of so-so volume. And it looks like maybe there's a slight negative divergence here on this weekly chart that maybe could send us down to the 50-week moving average. But I just thought it was kind of interesting that TLRD down 21% after reporting better than expected top and bottom line results. Okay, I'm going to turn it over to Erin. She's got a couple upgrades and downgrades for you. So take it away, Erin.
All right. I'm going to be looking at 1 upgrade and 5 downgrades today. All righty. So here's our one upgrade. So I'm going to just start there. And I like this chart. I was looking at it earlier. I'm moving a little bit more to some of these 6-month charts. Usually I do a daily, but I'm going to work on moving a little bit more to a 6-month time frame. So while I was looking at this, I really like this flag formation, and we're getting a breakout on this upgrade news. So I think this one, it's got room to run. The PMO hasn't quite turned up yet. It looks like maybe today it has or it will. And the OBV is a little bit suspect on the move, but I suspect, we're going to get some good volume coming in, obviously, on a 2% up move. So I'd be watching that. I like that pattern. All right, let's look at XPO Logistics. This one was a downgrade. I'm not overly worried about this one. You still have rising bottoms on the PMO. We also can see, even though it's decelerating somewhat, we got a breakout. And right now on this downgrade, it's pulled back, but it's pulling back to a good support area. So I think this one might be one to watch. You've got really nice volume pattern here that you can see. So I kind of like this one. It's a downgrade, so a lot of times it is nice to look at these because the immediate reaction is, selling. But if the chart itself has some strength on it, it can be an opportunity. So that's one of the reasons we do look at these downgrades. All right, Kohl's Corp also downgraded. And you can see that the investors are definitely on board with that, down 2.34% right now. PMO is starting to top. The only thing that I could say good about it are these tops that are moving upward, just like price tops. So I guess it confirmed that original move, but we're pulling back now, and I would be looking for a trip down here to support. So maybe a shorting opportunity, but certainly not one that I'd be watching too closely. And I know, Tom, you went over Oracle, so I won't go too far into it, but I wanted to show what my PMO looks like. And of course, when you get a big gap down like this below this area of support, you should expect to see the PMO turn down. And it has, obviously. And, if you want to look at it in a little bit of the longer term, this PMO top is higher, of course, than this one here. And that sets up, if you're looking at these tops, that's a negative divergence with these tops here. So I would be, also you're looking at a bit of concern there. Spotify, not that much data, of course, on Spotify, but on the downgrade, they're up 3.85%. So clearly investors could care less at this point. I would watch for that pullback, though. Maybe it'll start to sink in. You can see a lot of accumulation going on here with the volume. So you might get that pullback and leave a little bit of an opportunity, because you can see an ascending triangle here. I did not annotate it, though. So these rising bottoms and then the overhead resistance horizontal support line. Okay, and the last one, Terex. I see this double top on this downgrade. It hadn't really formed yet as of yesterday, but with this gap down, it has topped, obviously. We've got a PMO that is now had a negative crossover and is heading down. You can see we should have had warning that something like this might happen. Look at the tops declining on the OBV, yet those tops rising quite a bit before this drop. So that was a negative divergence. And you can, of course, see that the scooter is getting very much hurt on this deep decline, the gap down on the downgrade news. But that's all I have for the upgrades and downgrades. Bill, I think it's time for you to come in.
All right. Let me get my
everything all ready.
Hey, Bill, I have a question for you while you're getting set up there.
Sure.
A question I have is, how often do you trade? I don't know how much, if you're going to get into that, but as you're going through, setting up your routine and all, do you tend to trade and hold for a while? Do you tend to get in and out and, pretty quickly?
I don't have as much time as I used to, and I have started moving towards more large-based ETF sort of industry type things because I don't have as much time. But my typical thing would be to hold for weeks to months, to get a good momentum and just ride it for a fair amount of time. I just don't have the time to be sort of paying attention to daily moves and trying to get in and out on a swing trade that may last 3 days or 6 days or something. I've just got so much going on. I can't pay enough attention to it to really do that effectively.
Mm-hmm.
Okay. I thought that would just be a good little segue into what you're going to talk about, so everyone kind of has an.
I mean, time frame is a huge part of what how you decide to trade. So that's a good question.
Great, go ahead.
All right. As I say, I'm just going to kind of go through how I trade, how I start to try and find things, track them, how I monitor them, how I record my results, which I will hopefully go back and look at later and try and improve. And so I'm going to go through all the sort of some tips and tricks and how I use the tools. Of course, we've gone over the tools themselves, but you can get a lot of interesting information about how people use the tools differently than you do. So I'm hoping that everybody will get something out of this that maybe they hadn't thought about before or may try themselves. Also wanted to mention that today's poll is about some of these tools that you can use to monitor and keep track of your trades. So if you've got a minute or two while we're doing this presentation, if you want to take our poll, we'll take a little bit of time at the end and kind of go over what everybody else has for their favorite tools. All right. My first thing is, of course, the dashboard. As many longtime members know, we took a fair amount of time about a year or so ago revamping the site and updating the visuals. And one of the things we really wanted to do is make the members page an actual dashboard, a cockpit where you can get a lot of information very quickly and be able to get to a lot of the features on the site very quickly. And I think we've done a pretty good job. I've got some more ideas, of course, but this is worlds better and much more useful, in my opinion. So one of the first things I use is this area here we kind of call the market movers. We've got the top 3 items are more geared towards individual stocks, the various top 10s and what other people are looking at, other users, but they're basically at the symbol level. The bottom 2 are more higher level. They're sort of looking at the market as a whole and various time frames in the case of the DP signals. My favorite is, as you can tell, the predefined alerts. The predefined alerts will give me a pretty good idea what's going on in the market. There's a lot of breadth we look at there. I can see instantly things like NASDAQ hitting an all-time high, Russell hitting an all-time high. Tom talked about that at the very opening of the show, that those areas are very strong right now. We've also got items like gold. We've got sectors doing interesting things, industries. We've got the TSX and the dollar. We've got oil. And so this is a great way for me to keep a high-level view on the market, just to kind of get a feel. If I'm looking at this every day, I kind of know what's going on. You know, I got a general idea that I know tech's doing strong now. I know small caps are doing strong. So maybe that influences kind of where I go. So I use the predefined alerts to kind of give me an idea of what the market's doing. The next feature is one we put in sort of after we had done the initial design of the work, this dashboard here, and I love this feature. I've wanted to put this in forever, and we call it the chart panels. And this is basically just mini summaries, summary views. And as you can see, these are what I think are the most important things. I wanted to be able to go to what I consider the most important thing, and that's stuff I own. It's nice to know what the Russell's doing, and it's nice to know what all of these sectors and industries are doing, but ultimately, I care about what I've got money in. So I want to know what I own and what it's been doing. So I've got my section here for stuff I own. I'll say that this is a demo account, so this isn't actually anything I really own. It's just some examples. As I mentioned on my last talk, I put the Vanguard VTI in a lot of my chart lists, so I can kind of see how everything is doing relative to the market. Vanguard Total Market is an ETF that carries essentially the entire market. You can use any index you like, if you like the S&P or the TSX or whatever. And I put it in bold so I can kind of see where everybody's behaving. I usually sort from the percentage change, so I want to kind of pat myself on the back and see how all the good things are doing. What I should be doing most of the time is going the other direction and just kind of being on the defensive and just making sure I'm aware of the things that maybe are not doing okay. This is, of course, daily, so this fluctuates, so it's nothing to really get necessarily worried about on any given day unless you see something cratering. Like if you maybe owned Oracle, it would be interesting to know. So I use that. I have the stuff I own pretty much all the time, and often it can be a number of pages. We'll show 10 items on a page here. Then we can have 2 or 3 4 pages. So that can be, I can scroll through and kind of get a big look at everything I've got. The next item I have is a watch list, and that's I use it more than just things I'm interested in buying. Most of the time, people sort of equate a watch list with just things I'm tracking, and certainly those would be here. I also just use it for things I own that may be sort of misbehaving. It's sort of like maybe a penalty box or an area I can put things in so that I'm keeping a really close eye on things. And that may be something that's had a big dip. Maybe I'm not ready to sell it, but I really want to start keeping it under a confined space so I can look at it frequently. Maybe I've got something that's coming up on an earnings report this week and I want to keep an eye on that. I'll toss it into the watch list here. And like I said, we have 10 rows, and so we can put as many things as we want into these lists. Of course, we can put up to 500. I would find that horribly ineffective to try and look at 500 items on this view. So I try and keep my watch list just to 10. So it's 1 page. I can look at it and see everything that I really want to concentrate on every time I come to this page. And if I have something that I own that I want to put into my watch list, I don't necessarily move it out of this folder because I may have annotations and other sorts of information I want to move into this watch list, and I don't want to accidentally delete it. So what I can do is I can just go view as, and I can edit, and I can just quickly go down and I can say, okay, well, maybe Apple was doing something. They've got earnings sometime soon and I want to watch them. So I'm just going to add Apple to this. I'm going to go back to my dashboard. And we'll scroll down. So now Apple is in my list. Something interesting going on there. So I'll be able to quickly add items to this. Another use that I'll put sometimes in this list, if I have more money that I'm looking to put in, like I said, I had recently spent time doing sectors. So I would put things like the KRE for the regional banks, or the semiconductors, or retail, or home builders, or whatever. And I'll have maybe a list of 10 or 15 items that I would sort of, when I have some extra money and I want to sort of go back to the well and look at investing some more, I'll bounce into that list and I'll kind of look and see, keep an eye on those and just see how they're doing. So I'll have, when I'm ready to put some money in, I'll have a feel for what's been doing well. And then finally, I'll look at the scans and alerts. I don't have any alerts now, but we will be adding those very quickly. Scans is sort of one of the things I do here at StockCharts. So obviously as an investor, I use a lot of scans, and it's nice here that I can run a scan directly from the workbench or the dashboard here. I don't have to go all the way over and to the scan area, so I can just run a scan. This is just a sample scan I put together. It's similar to what I use, and if you want to, you can use the video controls to scroll back and pause this and take a look at it. But essentially, I'm looking for U.S. stocks that trade a fair amount every day. They're above $10, so they would have more institutional support. I'm not looking for ETFs in the case. This is the case where maybe I am looking for individuals. I try to avoid biotech because that just seems like a Russian roulette a lot of the time on the individuals. And I'm basically looking for 52-week highs with a lot of volume. So I'm looking for breakouts that a lot of people are buying into. And this time I got 35. I loosened this up a little bit, so I want to make sure I get some results for today's demo. Often I'll just quickly sort by the scooters, and I'll just sort of, this is a momentum scan, so it's not surprising, but look at all the 90s and 80s. So out of my 30 some odd results, probably 80% of them are showing me I'm getting stocks that are already outperforming 80 to 90% of their peers, and they're continuing to break out on strong volume. So these are sort of, I'm trying to find sort of the best of the best in terms of momentum. We do have some that are sort of in the mid-range of the scooters and are starting to pop out, and some people want to kind of play that. I tend to try and find strength that builds. So this confirms that when my basket that I've just found is sort of the area that I'm looking for. I'll also look at the universe. And again, we've talked about small caps, the Russell doing well. Tom talked about this being a show, but look how many small caps there are on my scan here. More than double the total contents of the mid and the large. So again, that little thing I've in the back of my head that's from looking at the predefined saying that small caps are strong, Russell's strong, it's backed up here. I can easily go and do the same with the sectors. We were talking earlier about the XLK doing well. We've got technology and cyclicals. So we've got a strong presence of both of those here. So that's, again, more information that those areas are where the action is at. So I'll sort by symbol and I'll store my results. I'm just going to do that. So now I've got everybody into a chart list. First thing I'm going to do is I'm going to go look at candle glance. Now this scan typically finds a lot of momentum. So a lot of these charts have the same pattern, what I kind of want to see up and to the right. Your scan may show all sorts of different variations where the scan is technically true, but you've got some history or something that you may see in a candle glance that makes you maybe not interested in it. It's like, say, for example, Fox may get bought out. So maybe if there's a price named, it's going to just sit at 44 forever. So maybe I don't want to do that. I'll just click on the garbage can. Very quick to go through these. We don't prompt you if you want to delete them. So if you delete these guys, you want to be sure you want them to go. So you can very quickly go through and slim down your what you want. So here, hey, maybe last night we had a nice big pop up during the day, but we ended up sort of a hanging man. We're still sort of popped back down into this trading range. So maybe that's not what I want to see. So this is a way to very quickly go through and take your scan results and hone them down into something that's a little bit more useful. I usually try to get a scan results of maybe 15 or 20 and then hone it down to maybe 5 or so. So one of the items, I'm just going to pick one at random, is AMD, where obviously that's a big tech place now. So I'll just click on AMD and I'll get a chart. I think parabolic is not even the right word for that. That's like a rocket. That's going straight up. So there's a lot of people who are, from a momentum standpoint, are going to love that. I imagine there's a lot of people who are, like me, a little bit wary of that move. One of the tricks I'll use is to use a chart style here, and I'll use Gaddis Roses. Gaddis taught a class here in Seattle area, and I helped out for a long time with him doing what I'm doing now, lots of tips and tricks. And we came up with this as a way to look at how an item is performing relative to the market, how the sector is performing relative to the market, how the industry is performing relative to the sector, and how the item is performing relative to the industry. So what you'd like to see is that your item is outperforming everything. So your sector is outperforming the market, your industry is outperforming the sector, and your stock is outperforming its industry. And AMD is doing a pretty good job here. I mean, look at AMD against the market, 175%. AMD against the semiconductors, 100% outperformance. So this is a view that will give you a good look into the sector and industry sort of idea of finding outperformers in all areas. And I'll scroll down, and oftentimes here, Gaddis also likes to look at the money flow. I know Erin talked about that, and on-balance volume. Again, that's an interesting view to look at. I will go down and take a quick look at seasonality. It's usually not a single thing that I'll make the call, but look at this, June. AMD up 100% of the time, average 10% over the last 5 years. I mean, that's a pretty significant seasonality there. So if I have narrowed this down to 2 or 3 items, and one of them gives me a signal like that, and I know it's maybe it's not a small cap, but it's in technology and semiconductors, and it's got that sort of seasonality, that just might be enough to give it a nod. I'll also look at the point and figure. I want to try and find something that doesn't have a lot of overhead. I mean, my scan's looking for a 52-week high, but if it may be a 52-week high after a pretty significant downfall over the last couple of years, and there may be a lot of overhead supply there that I'm going to have to get through. So maybe I want to take a quick look at the point and figure and just make sure I'm not have a lot of overhead supply where there's a lot of other sellers out there that as soon as the price starts going up, they're going to want to get out and run away. So this is another good one. It's looking like a very long consolidation and a breakout. So this could be another good sign.
Hey, Bill.
Yes.
If you're looking at this stock, I mean, you just pointed out how it's, almost, well, it really is like parabolic move to the upside here, but it is breaking out through some consolidation. It looks good on the point and figure. It looks good, on some of those relative charts that you're using. When you find a stock like this, do you set an alert at that point, a price alert, so that if it pulls back to something that you'll buy, or do you just
go? So yes, exactly. So I'll keep moving on here, and we'll just kind of use AMD. So okay, I'm going to go back to AMD, and I'm kind of look at this, and the very first thing I do, if say that I'm at the point now where I'm really interested in AMD, I'm thinking, okay, this is looking pretty good. I'm going to be able to pay my house off by December on this thing. I know it. I want to start thinking about where I'm going to put stops and where I'm going to get into this thing. And I use a pyramiding technique. So I don't put everything, an entire position in at once, because I'm pretty much a walking Murphy's Law. If I put everything in at once, the SEC will investigate it tomorrow or a downgrade will happen. So I'll put in 50%. And then I'll wait maybe and let it go up a couple percent. And then I'll put in maybe 30%. And then I'll let it go up a little bit more and put in the final 20. Sometimes I'll vary that percentage ratio, but I'll sort of let the stock prove that it's continuing to have momentum and to go up. And at the same time, I'll sort of pick out a natural place where I would put a stop. So and this can be done a number of ways. IBD will tell you maybe 6 to 8%. You can look at support if there's a gap. There isn't really a gap on this one, but I know, Tom, you like to sort of get down to gap support. So maybe I would say, well, if it breaks gap support and continues to close, maybe that's where I want to put a stop. There's the various moving averages. So I look at it first and I try and find where I might want to put a stop. And then exactly like you said, the first thing I do is I go to alerts. So assuming I'll put this into my, I'll do a save as, and I'll put this into my stuff I own. Might already be there. So now I've got it in my watch list, or my the stuff I own. It'll show up on the workbench. I'm gonna go back to my members dashboard. I'm gonna go down to my alerts. I'm gonna create a new alert. This will be a price alert, which is very simple to do. I just pop in AMD. It'll give me the current price. Like I said, I pyramid in every couple of percent, and well, since I designed this, handily enough, there's a calculator there that tells me exactly where that's at. So I can say there's a 2%. I save the alert. So now I've got an alert. So when that goes off, I've already put my 50% in. So my next alert is going to tell me to put in my 30%. I'm going to create a new alert. I'm going to also do AMD again. And I'm going to put a 5% down. So this is not necessarily, switch that to below, not necessarily that I'm going to sell there, but it's going to put it on radar. So what it's going to do, it's going to alert me to say, okay, I need to take you out of my stuff I own that could be pages long and put it in my watch list, because maybe I'm starting to get close to that sell point. I need to, when that happens, I need to really reconfirm where I want my stops, what I'm going to do. I need to get my plan together. It's an early warning system. So now I've boxed this guy in. I've got something on the upside and something on the downside. I can kind of give it a little room to run. I don't have to be looking at this daily, because like I say, I'm in for trying to put this for weeks, maybe months. So, but I've got my alert set up such that if anything goes in a certain direction, it'll trigger me to take the next step in my plan. Sometimes I will go ahead and, I talked about, I have 2 entry points. For my second, I would be up 2%, and then I would be another 2%. There's a 5% here. So maybe I take this down a little bit from the 5%. Maybe I take it down 1%, maybe 16 cents. So I maybe put in 40, that'd be about a 4%. Save that. I'll go back to my dashboard. Now I go down to my alerts, and I've got my alerts. So if this is my 30% buy point, this is my 20% buy point, and this is my watch point for, so if something starts to go wrong, I'm gonna have to take a close look at it and see what's going on. So that's a very handy thing for me, and I use that all the time. Then what I'll do is I've got a little sample here for how I use annotations. And this is just, this is actually an optimal scenario where a trade actually works. It's not my usual. I'll use call outs to sort of put on the chart where I've bought pieces, what price. And if I get all the way up to my full buying, I'll maybe put something in that's the average cost. So I'll have something in my head that says, okay, I own McDonald's at about 141. I can put other items in here, like when I'm up certain levels. Some people will say, if you get up 20%, that's where you really want to make sure you don't give your profit up, and you really want to pull your stops in. So we can go down to the annotate tool here, and there's multiple ways of doing this. You can do a call out like I've done. You can take a horizontal line, maybe use red for your stop. You can use another one up here. This is if that's your target. Maybe you can use green. There's all sorts of ways to do things with this. Another thing people will use for stops, because those horizontal lines do make a little bit of a noise across the whole chart. You can just put in a little spot where you've initially set your stops. And what I'm doing here is I'm creating history. So maybe I got up to here and it got up to this, and I'm constantly moving my stops up, right? If as the trade works, I'm maybe moving up my stops every time it goes a little bit further. I'm latching on to where I want to put my stops. And as I move my stops up, I change my alerts. So originally I had a couple of alerts as I moved in. As I've hit these alerts, I'm also moving my stop up, and I create my new alert. It was 5% down, but as it goes up, I'll keep dragging it up with me so that I get to a point. I don't want to do is be up 20%, kind of lose attention, get busy, find out it pulls an oracle, and it goes all the way back down to where I bought it, and I get out with like $24. I've spent all that time and effort, and I've gotten 2 lattes and a pizza. It's just not worth the effort. So I really want to keep track of it. So I use the alerts. I move these up as I go, and I annotate it so that I can keep a history. I'll just save that. I'll go back out here. Now, at the end of the trade, I typically move out faster than I move in. Stocks go down much faster than they go out, so I'm a little bit more aggressive when things start to go wrong. So I'll probably sell about 50%. And if I go down another, I'll just sell and be done. A lot of times, maybe I'll sell half, and if it recovers, it goes back up. I'll start to, if it breaks past this high, I'll start to maybe move back in. At the very end of the trade, what I'll do is I'll sort of create a little summary, like almost a scorecard. I'll put in my date range. I'll put in these average costs. I should note that I guessed on the average cost. I didn't actually do the math. I'll put in my gain and my profit, and then sometimes I can do things like I compare myself to the S&P or the TSX or whatever industry or index you want to sort of, how did I do? Did I do just average, or did I outperform? And I can actually give myself a grade. I can say, if I made money and I beat the S&P, great, just keep doing it. I could then take that grade. If I really want to get analytical about these, I can come up with a consistent set of rules and how I grade myself. I put it in a spreadsheet, and I can average my trades. I can get a GPA on my trades. Then I can look at my trades, and if they're not going right, I can say, okay, something's going wrong. Either I'm not following my rules, which you should have written down. You should have checklists and follow your rules. Maybe my rules need updating. I can go back through my trades where I've annotated, and I've maybe made notes about why I've done something slightly different than my plan, or some event that happened, like the Oracle downgrade or an SEC investigation or whatever. I track that. And sometimes it's just a case that things are going sideways, and it just means that the market isn't the type of market I trade in. So things that go up and down very quickly, when we get into really choppy markets, I don't have the time to spend paying attention to 1 and 2 day moves. So I know that if I get in and my grades start going down, it's telling me that maybe this isn't time that I'm supposed to be trading. So you can use that grading system for that as well. Then the final thing I do with the chart at the end is I come down and I set the date range to a start end, so the date range covers the action dates that I was in the trade. If I don't do this over time, obviously we'll be putting more bars on the right side, and all this annotations will slowly move off the screen to the left. By setting the date range and saving it, I've sort of locked this view. So I can come back to this chart in this view and basically get a summary of everything I did. And the final thing I do with this is I'll move it into a chart list called 2018 closed trades. And I'll have one for every year, and every quarter or 6 months, I can go back and look through my trades and just see how I did. And I can revise my rules based on what I say. Well, I consistently get to the point where I'm up 20%, and then, man, it drops 10 or 15%, and I don't get out. And I need to set better alerts, whatever I can take away from that. And that's sort of my workflow from beginning to end.
Well, I have to say, first of all, that I was pretty amused. I always like your sense of humor, but I have the same feeling you do sometimes, Murphy's Law. And I'm sure just about everybody who watched this presentation knows that feeling, when you just go through, especially everybody goes through a slump where just nothing works. And, I'm kind of getting this picture now that you're a walking accounting irregularity or something.
Yes, what was this, the Peanuts character who had the rain cloud constantly over him?
Yeah, exactly.
Pigpen or somebody, yeah. Something.
Yeah, anyway, that was a great presentation. We've had a lot of guests on here, and, Erin and I have done the anatomy of a trade, and we've had, guests who come on and talk about their style and all. This was really probably the most detailed um, analysis that we've had, where you've combined not just the, your trading style and how you go about your routines and everything, but also using a lot of the StockCharts tools to, keep you informed and to keep you up to date and to warn you of certain things, many of the alerts that you set up and so forth. So I think it was a great demonstration, really, of how somebody can use their own trading system and then combine it with some of those tools that you talked about to better manage their trading and their trading results.
Yeah, it is really interesting to talk to a lot of different people and see how many different ways you can use the same tool. And that's one of the things I was hoping that folks will get out of this. Is maybe that there's some way that you've used the tool before, but you hadn't thought of it a certain way, or maybe there's a different spin on it. There's a lot of different ways to use these tools.
Yeah, no doubt about
it. I've got a few questions from the chat room real quick. Of course, everybody has plenty of things they'd like you to add.
This is always just a veiled attempt for the Tom and Erin feature request.
Exactly. So, of course, one was, do we do earnings dates on charts? Which, of course, I know we don't. But, of course, they're interested. Is that something that is under consideration, as they say?
Not that I know of. I mean, one of the things is, of course, finding a supplier that you can work with who's consistent and accurate. And I don't know that we've spent much time trying to vet that, because the worst thing you want to do is present something that's not really rock solid. Going back to my annotation thing, that's another when I'm in a trade, I annotate the earnings so that every time I look at my chart, I know when the next earning date coming up.
Yeah, and I'll just add that I did talk to Chip about that once before, and I know he was very interested in trying to get something, but he also said that information, that data, is extremely expensive.
Those people will charge. It wouldn't be uncommon to spend $25,000 or $50,000 a month on something like that. I'm guessing here, but I've seen other types of data that run that expensive.
Yes. Let's see. Only one more at this point. How about when do you sell? Do you use moving average crossovers as your stop to sell?
I can. I use a number of different things. Certainly, that's one of them. If I start to see volume picking up, I'll start looking at 1 minute bars. I'm starting to see like maybe institutions are getting out of things, or I'm starting to see volume starting to increase. I'm always a little paranoid around earnings, of course. A lot of people will say they don't hold across earnings. Sometimes if I'm really paranoid, I'll go out and buy puts or something as insurance. So there's a lot of different things I'll use. Moving averages is certainly one. Sometimes if I see it break support on strong volume, sometimes you'll see a stock sort of tear down. I know Gaddis talks about 3 lower highs and you're out. That's a very simple rule, but it's often quite effective. I'll also, and this is another thing that Gaddis and I it's something that he and Grayson used forever. We talked about in the class we taught here, was to look at not only your stock as an individual, but to look at the sector and the industry as well as some of its competitors, because you'll start to sometimes see the industry or the sector roll over first. So that may be an early warning sign that the sector is starting to come out of favor. Retail looks great, but you're starting to see, Macy's or whatever it's doing great or whatever. But you're seeing XRT starting to roll over. So it's like, maybe that's the canary in the coal mine. So I need to kind of pay attention to the aggregate and just not be focused on my one piece.
Well, that was fabulous. That's pretty much what we had in the chat room for you.
Yeah, I know you mentioned earlier, Bill, that we were running that poll. So I think maybe this would be a good time maybe to take a look at, some of the different tools that you can use to kind of manage, what you do or what everyone does in when they're trading, when they're tracking their trades. So which of those would you have checked off? What are the biggest ones for you? I could probably guess, but
mine was a toss up between alerts and the chart list panels, just because the alerts allow me to not pay attention, but be notified. So that's pretty critical to me. And then the chart list panels, again, it's just a quick way for me to not have to go very far to see what's going on. I think all of those, actually, I created the list of those. So I think they're all valuable. But those two, I think, are especially valuable for me because I don't have a lot of time to to watch the market. So alerts, I think, is probably my top one, and it keeps me on the straight and narrow, keeps me paying attention to what's going on. And with the new price, so we put this price alert feature in, I think in last October, it's just so very easy now to create price alerts very quickly. And we doubled the number of alerts that people have. So there's no excuse not to just, back up the truck and just pay attention to those things.
Yeah, I could check off all 5 of them, but I haven't really gotten into using the alerts as much because I do follow the market very closely throughout the day, but I still will go back and find stocks. It's like, oh, I meant to look at that when it hit the 20-day, and and then I didn't act because I didn't see it at that moment when it did it. And so I do think if you like a stock, I think the alerts, for me, that would be the one that I should use a lot more than I do. But I use the chart list. I would definitely say the chart list for me is number 1 as well. So I'm agreeing with the authority there.
Well, that's the thing, to challenge people to say, okay, well, maybe I'll try using this a little bit more and see how it works for me. It's a lot of, we can get sort of in routines. I mean, it's good to be in a routine to a certain extent, but it's always nice to sort of say, what else is out there? Am I missing something that could improve and this is if you go back and you look at your trades and you think, wow, I've got this sort of blind spot where this sort of thing keeps happening to me over and over. Well, what can I use to kind of make that better? Do I change my scan to weed out certain things that I kind of constantly get into? Do I, use alerts? What can I do to make that better? And that's always a process, a learning process that we all keep going through.
Yep. Well, it was a great presentation. Awesome having you on here. I know in the past we've only had you for about 10 or 15 minutes, so it's good to get you in here for 30 minutes, go through your whole routine. I think everybody enjoyed that.
Yep. Thanks for having me.
All right. There he goes, Bill Shelby. Great presentation. Really enjoyed it. I was kind of watching too, because I mean, you're talking to the guy who designed a lot of this stuff, so it's pretty impressive to have him come on and show us exactly how you can use some of these tools. But anyhow, what was your before we get into the 10 and 10, Erin, what was your, which tool would you say is most helpful for you when you track your positions and all?
I would have to say the chart lists, because I can separate everything out. I can, look at those columns to see where the scooters are. I can, go through and, like Bill was saying, have that, okay, this is what I own, but then my watch list of what I might want to own. You can just separate everything out, and it's like a filing system. And so for me, it's just intuitive. So the chart list.
Yeah, and I think too that's what we've grown to use so much. And I think that's probably why we see such a huge win on this poll by chart list. I'm sure that's the way it is with a lot of folks, that they're more comfortable using the chart list because that's what they use. But I agree with all of them, and I would just say, hopefully, down the road, I still think chart lists, even if I use the alerts to its full, to its fullest extent, I still think probably for me the chart list would be the biggest thing, because I'm able to organize all the different groupings that I want. Having multiple chart lists is really huge for me. But I definitely could see the alerts growing over the next year or two. And I'm sure that's what Bill was thinking when, they created the alert system and improved it. So we'll see.
Absolutely.
Okay. So I know we got the 10 in 10. You want to take it and see what you got on the RRGs, or however you'd like to look at it?
Yes. I have it all ready to go on. There we go. So here is the look as far as what we had on RRG. I've already picked out a few that looked interesting that I'm going to add, but I'm going to leave that as a surprise. There's, we only had 2 that were in the improving group. So I thought that was interesting. And then, of course, I like to look at, the different sectors, try and pick an ETF for our list. So, but everybody go into if you're in the chat room, go vote by liking other symbol requests, and that will be the next symbol, regardless of whether we've looked at it recently or not. Currently, CLWT is leading in popularity. So go ahead though, and Tom, Etsy, we're going to do that one. And I can tell you, this is one I wish I'd gotten back in on.
Yeah, I think it ran into some momentum issues for a period of time. And this is one of the things I talked about the other day in my workshop when I was talking about the PPO and negative divergences, and how they don't necessarily mark a top. They just give you a little bit of a clue, maybe that you need more consolidation. And here was Etsy back in February and March, moving higher, great volume, kept pushing higher. And then when it finally got to this recent, or the top in early May, you see the volume just wasn't there. You can also see the PPO had been rolling over for probably about 6 weeks. And so what that told me is that the 20-day moving average probably wasn't going to hold, and that we should be looking for a 50-day test and a PPO centerline test. We got both of those, and now look at the momentum resuming to the upside. Huge gap up today. I'm not sure if this was earnings related or not. I didn't see it on the earnings list, but it could have been. Huge volume, though, 18.9 million shares. And here we are just past the halfway point of the day. I mean, it is swamping its normal volume, and it gapped up, and it's continuing to trade higher after the open, which I think is also a very bullish sign. So I think ETSY looks great. If you're in this one, congratulations. I think it goes higher.
All right. And the most popular symbol is, and it won CLWT.
All right, CLWT. Yeah, it just recently hit this high at 750, so I'm not surprised it's backing off. The other thing is, many of the, if you take out the big volume days, this isn't a huge volume stock. I could probably inspect it here, and you can see the volume. Volume is in this little box there, but 23,000 shares back on April 16th. 13,000 on April 17th. 13,000 or 10,000 on April 18th. I mean, you can see that the volume just normally isn't that great. So when all of a sudden the volume comes in, I'm guessing there are very few market makers that are on this particular stock, which is what allows the stock to move so crazy with this heavy volume that we've seen. So it's just too volatile and probably too manipulated for me to invest in. But I would say that the recent top, that double top, was fairly significant. And until we can get through, say, about 760 or 770, I would expect some consolidation. And maybe, we've over the past couple of months or 6 weeks since this thing's been, moving up in high gear here, we've only had one test or one failure on that rising 20-day moving average. And that was right here one day where we went down just below the 20, and then we came right back up, moved higher again with heavy volume. So that's what I would be watching to the downside. I think that your reward to risk starts to look much better if you can get this stock back down into the 5.25 range. And that's what I would look for, although I wouldn't buy it just because of the lack of liquidity.
All right. The next one up will be an ETF. Let's see, Innovator IBD 50 Fund, FFTY.
Yeah, the Nifty 50 here. Really nice move up. Don't have really anything to say. It is kind of a ETF kind of a thing, a fund. So I don't look as much about with the volume, because to me it's more about the underlying stocks. But I think that the chart here looks really good. So I would, if I was annotating here, I got to recognize the breakout that we've seen, taking out the January high. Clearly, this is better than the S&P 500 because we're nowhere near to clearing that January high on the S&P. The other thing that I really like about this one is that when we have had some pullbacks, you can see we continue to rebound at or just above the 20-day moving average. So I would continue to use that as key support.
Okay. Let's see, Comcast. And that chart looks quite interesting, I suspect because of the news we had earlier this week about AT&T.
Yeah, I think Comcast actually outbid Disney for Fox's assets. It was in the $65 billion range or something that they came in with. I think Fox is kind of splitting into different entities. I haven't really read all the details on exactly what's going on with the organization, but I do know that Comcast did come out with an announcement to outbid Disney, and so the market's liking it. I do think that this is potentially changing the character of this short-term chart from a downtrend to an uptrend. And I think for me, what would really confirm that would be taking out the double top that we saw back in April. So I think eventually moving back up and clearing this double top, because after printing that high, we moved to a new low. So really to reverse the trend, what you want to do is take out that previous high. So a move back above 34.5 to 35 is what I'd be looking for. Until we get that, I think maybe we consolidate a bit more.
Okay. The next one, we're going to go for our friends in Canada, meg.to, and that is an oil and gas producer.
Yeah, nice looking chart. I think we're consolidating, and maybe you could draw. That's not exactly an ascending triangle, but it looks a little bit like one. If this high had gotten up a little bit higher, you could draw these tops across with a rising low. So it's not quite. Maybe it's a little bit of a sloppy ascending triangle. But the point here is that we were moving up with really strong volume. I think we're consolidating, and as long as we can continue to hold on to support, I'm going to say down around that 8.25 area. I look for this to eventually break out. I don't like that candle from 2 days ago. We've talked about this many times. When you take out previous highs, but then you can't hold it and you leave that tail up there, I wouldn't be surprised here if we get a little bit more of a pullback. But I think $9 would be your first key area of support. The 20 days been pretty good. And then the second area, the biggest area for me, would be holding on to that 8.25 area.
Okay. Let's look at JP Morgan, only financial sector request today. I thought that was interesting.
Yeah, JP Morgan was really taking it on the chin earlier and hasn't improved much here. Heavy volume, too. We've traded over 10 million shares. So we're on pace to do probably about 18, 19 million shares right now. And as we turn lower. Now, I would just say this. We haven't broken down. I don't expect we're going to break down, but that doesn't mean we won't. I just think that with higher treasury yields, I'm looking for the market to move higher, especially the banking group. Why it's not doing it at this point, I think part of it is that JP Morgan is one of those large money center banks, huge banks, and the money in the financial space, especially in the banking space, is rotating much more toward the regional banks. So I think right now you're in a good industry group. I just don't think you're in a great part of that industry group. And as a result, I would expect maybe some more consolidation. But I would watch, and I'll probably even go down to about this 105, 106 area as pretty critical support for JP Morgan as we move forward.
Okay. Next one up, Pepsi, PEP.
All right, let's see what Pepsi is doing. I haven't looked at Pepsi for a little while, but it is in that soda space, strengthening, which is good, but it is up against price resistance now. So the prior low that was in place back at the end of March was around 105 and change. We bounced off of it to the 50-day, and then look at the volume pickup as we lost that support. This is our first test now of overhead resistance. We're doing it with some pretty decent volume. I mean, I look back, I think the volume that's come in off the bottom, and it may just be value investors, but technically, I do think things would start to improve if we can clear about 105 and a half, 106, and have that coincide with this type of volume coming in. I think that would add to what already appears to be maybe a turning chart.
Okay. Let's look at MAS. That would be Masco Corp.
All right, MAS. Yeah, I'm not a big fan here. Again, this another stock's been downtrending. Keep in mind, you got the NASDAQ at all-time highs, Russell 2000 at all-time highs. The Dow's been improving. The S&P 500's been improving. And we've still got this stock, Masco, sitting here at about $39, trying to get through a major area of resistance. I draw the top line here from the top of gap resistance because we gapped down and sold off on over 12.5 million shares. That was a huge sell-off on big volume. And now here we are getting back up just into this key resistance zone. And you can see the PPO right at the center line, starting maybe to roll over again. I think that this one's got some work to do. I would not be at all interested in this until it can show me a big volume move through 39.50.
Okay. Geron Corp, GERN, biotech, of course.
Yeah, I think Geron, we may have looked at fairly recently, but I know it's, we can take a look at it.
Been over a week because I did check my spreadsheet.
That's fine. I just remember the name, and I know it's, isn't it one of the biotechs?
Yes, it is a biotech.
Yeah, had a huge move up, a little bit of an inverted hammer shooting star there, and then we pulled back. I think we're hitting our the moving averages starting to turn higher. I think in the short term, we printed a hammer, and so maybe from a price support level, you might kind of watch around that 360 level now because it looks like we do have that rounded bottom. We're starting to move higher again. I think that's a positive. If you look back after this move, when we put in a rounded bottom, we started to move higher again. You saw the volume start to pick up a little bit. I'm not saying we're going to do this all over again, but I think that the odds are at least increasing that we're beginning an uptrend here. So I think GERN looks pretty good, and I like the volume coming in today.
All right. A popular one that we have not looked at in about a week. How about Micron, MU?
All right. I think this is our last one, right?
Indeed it is.
Okay. First, I'll say I own Micron. I'm holding it as long as the 20-day moving average holds. So I got in just a little bit below this level, but I'm not gonna take any chances. I expect it to hold the 20-day, but let me go ahead and annotate and just kind of mark these tests, because right there you can see the test. Here you can see a test, and now here we are again with a potential test. Now, if you wanted to use a price instead of a moving average, you could take the recent low, which was right here, just above $56, or you could go down to the bottom of gap support. You can see the huge volume gap up here. Some might want to look at gap support. I want to keep the stop a little bit tighter here, but I would say 55 to maybe 56 and a half. That area is the key price support zone that I'd watch, and the 20-day moving average. Just with the price action moving up, the PPO looking strong, I like to see the 20-day move or 20-day moving average hold. So that's what I would keep an eye on.
Okay. And that concludes our 10 and 10. And here are the symbols that we just went over. I will have these up in the Market Watchers Live chart list, which you can find by going to the blogs tab, clicking on the Market Watchers Live blog. Link is right there at the top. All right, I want to talk to y'all about ChartCon. It's that time. And I do hope everybody is going to be going, because you don't have to actually leave your house if you don't want to. It's going to be a streaming concert. Yeah, no, it'll be a streaming conference, August 10th and 11th. Great theme that we have. If you go to stockcharts.com/chartcon, you can see the agenda and the speakers. So I highly recommend you go check it out. And for $249, you can get not only the conference and be there live, but you'll get the recording so you can reflect back on it later. But now it's time for our final market update. All righty. I'm looking at 2-day 10-minute bar charts. So just to give you an idea what you're looking at. You can see that the Dow is down today, but not by much. We can see the S&P 500 really choppy trading today. Quite a bit of up and down going on. It's sitting about 2782 now for the S&P 500. The NASDAQ, of course, is getting ready to challenge new intraday highs. And, it was forming this double top, but it looks like it might be able to pull out of that and continue higher. We have the S&P 400, which really, fell quite a bit at the end of yesterday with the small caps. It hasn't been that choppy. It is mostly unchanged, however. And we can see Russell 2000, that's been choppy trading. But currently, it's sitting right in the middle of the zone it's been trading within, up 3 points currently, Russell 2000. The Canadian markets, we're seeing the TSX in a nice rising trend channel here. I would expect to see the TSX continue higher into the end of the day. Treasury yields are down today. We're looking at 2.937%. UUP, big gap up and is heading higher at this point, reading 24.91. So I think it's interesting. You can also see that gold is up. GLD is now reading at 123.50. I did write about how in the very short term, UUP and the dollar and gold are starting to decouple. So we could very well see them traveling in the same direction. USO oil down slightly, reading 13.44. And the VIX is traveling lower, quite a bit lower. We're now reading at 12.05. And that's all I'm going to do for our final market update, because I think we should move right into those momentum sleepers. But did you have something you wanted to add to the market update?
Yeah, I just wanted to take a quick look at a couple of longer term charts. We talk so much about what's going on in the day-to-day and even intraday stuff. But when you take a look at the long-term chart, you can see that, first of all, technology just recently broke out to a new high. Also, the XLY also broke out to a new high just recently. So these are pretty interesting. I don't even want to say interesting. These are really definitive charts that, in my mind, confirm that we are solidly in a bull market. And what you typically see in a bear market, or maybe at the start, or maybe just before the onset of a bear market, is you see money begin to rotate into some of the other defensive areas, like, say, the XLP. So let's pull up the XLP. That is not what's happening right now. You've got money that has been rotating out of defense. If we pull up the XLU on the weekly chart, you'll see the same thing. Defense is going down, offense is going higher. And one of the areas that I think is going to be interesting coming up, and I want to continue to watch, and I know it's frustrating, the group has not been performing well in the first 4 or 5 months, or maybe for the last 4 or 5 months, I should say. After posting that high in January, been pulling back, but the overall uptrend remains in play. And I think you've got great support on the XLF between about 2650, this prior high breakout, and these lows that come in maybe around 27. So I think 26.5, 27 is great support. If I had to get into an ETF right now, you got the XLY, XLK that are flying. I think you do have more downside risk in those just through normal pullbacks. I think financials are really set up really well here. So that, I just wanted to mention that before we move into the momentum sleepers. Now, it has been a month, I guess, since we did the last momentum sleepers, and I wanted to go through and just point out some things that we had talked about a month ago. So there were a number of stocks. I think, Erin, you had gone over 5 of them, and I had gone through 6 of them. And the results were pretty stunning. This was back on May 11th, so now it's June 14th. So we're talking about a 5-week period. And just to give you an idea of some of the things that we talked about, I know you had Advanced Auto Parts, AAP, and then some other smaller stocks, BPY, CTIC, ENPH, INTC. I'm not going to pull up all the charts here, but I am going to pull up a couple of these that you had suggested as momentum sleepers 5 weeks ago, and I want you to take a look at this. First one was ENPH. So this was back on May 11th, right in here. The stock, and I can see, perfectly, a nice little cup handle, awaiting a breakout, and you finally got this breakout. And ENPH, since the time of that breakout, it was at, let's see, 509 is where it closed on May 11th. I don't know where it was intraday, but currently the stock is at 638. It was actually at 615 when I looked at it an hour ago. So it's breaking out and volume coming in. So it's even done better. It's actually up now about 24%, 25% from where you had mentioned it just a little over a month ago. It did have a little bit of a soft patch here for a few days, but it has rebounded strongly. I'm not sure if that was earnings related or what, but nonetheless, great pick over just a 5-week period. The other one that you had mentioned was CTIC. Well, you mentioned 4 others, but this was the other one that really took off. This was back on May 11th right here. And this is another one just sitting here waiting on a breakout. And anybody who followed this one and looked for that big volume, the increasing volume on the breakout, got it about a week later. And the stock now is trading at $4.93. It was at $4.14 when we talked about it, or when you talked about it, 19%. So 2 huge winners there. I want to just say your 5 stocks that you gave had an average return of 11.06%. The S&P 500 in the same period went up 1.87%. So a super job there.
Well, thank you, but it's a lot to live up to now this week, isn't it?
It's going to be tough after the results you had on those. Now, I had 6 stocks and did have the misfortune of having the only one that went lower during the period, which was Best Buy, BBY. So of the 11 that we gave, you gave 5, I gave 6. There was only one that went down, and this was it. And I think that was earnings related, but I also benefited on another stock with earnings, so I won't complain too much. Netflix was a big one for me. I had pointed out Netflix at $326 back on May 11th. So right in here. And this is another one where it was just kind of a little bit of a momentum sleeper because we had the move back up, looked like we were breaking out, pulled back to the 50, just sideways consolidating. And since then, about 10 days later, we got the breakout. Again, you can see the volume picking up, and Netflix has not looked back. Netflix now at $392. which is actually up just a little bit more than 20% from where it was just 5 weeks ago. And then the other one, while I did have the worst one, I also had the best one. That was Tiffany's. Now, I think this is where I got benefit of the earnings that came out. And all of you know I don't hold into earnings, so I would have never had this. But for those of you who did or who were looking at maybe some momentum sleepers that we talked about, had a nice move up. It was in a good space. It was just kind of, you can see all of these tops up here around 105, kept trying to get through. Well, earnings came out and had no problems getting through 105 after they posted outstanding numbers. Tiffany now at 135-ish, and that is up about 30% in the last 5 weeks. My 6 picks, by the way, were up about 10% on average, so you got me by 1%.
I think we both did quite well, so I'm not going to beat you up over beating me.
Nope, but I'm going to let you start off. What do you have for this team?
All right, let's take a look. I did find 5. All of them will be, I'm sure, on the summary slide. So if I don't get to quite all of them, you've got the symbols here to look at. So I looked at these, and the way I came up with them, I wish I could just tell you a formula, but really I just went into those predefined scans, and I took a look at, the PMO and just sort of the setup. I didn't run my PMO scan because that one doesn't necessarily pick out one that's been in sort of a holding pattern and then breaking out. So using those predefined scans and candle glance, I just, went through and, picked them apart and found these 5. So let's start with pros holding. You can see we are in this pattern going sideways, a trading pattern, trading channel, and we've got a breakout today, just slightly here. But look at that PMO. It's ready to move back up. It's not overbought. You've got a strong scooter. And of course, OBV volume is going the right direction on this breakout. Would like to see a little bit more volume coming in on the breakout. And we do want to see it close above. But this is one I would keep an eye on. If that breakout can really stick, I think this one could be a good one. Let's look at Alkermes. I think that's Alkermes. This one I thought was interesting. You have this ascending triangle. We've got the breakout. This one, I mean, granted, we are getting a little bit more, it's already sort of rallying, but it's just now executed this triangle. Typically, you're going to get a minimum upside target, the length of the base of your triangle, and that would come up here and get you up to that gap resistance up there. So I would be watching this one to at least move up to gap resistance. And you've got the PMO just now moving into positive territory. Look at the OBV, look at the scooter. I think this one looks fantastic. Aptar Group. This one, we have another ascending triangle. It hasn't really broken out just yet, but I like the setup here. The PMO is just about ready to give us that buy signal. So I think that's a good sign. You've got rising bottoms on the PMO, in turn, rising bottoms in price. So that's a nice confirmation, bullish confirmation, and as well as rising bottoms, on the on volume rising. So that's, you want to see that. So I thought that would be good for a breakout move and could move up. I mean, the next area of resistance is rather close, probably, right around $96. But I do think this one has some good potential. Again, you'd measure the back of this ascending triangle, and that's the minimum upside target's going to come from that. So that would definitely put our minimum upside target above 96. Foamix Pharmaceuticals, and you can see these are kind of all over the board as far as industry groups, etc. We don't have a scooter on this, and somebody asked, if there's no scooter, should you not look at it? It's just a matter of it's not been put into the universe of the large caps, or it's there are so many stocks out there, so they're not all in there, and I'm not sure what the threshold is to get them a scooter or not get them a scooter, but I would go check it out in Chart School. Read the scooter, and it probably will give you some of that information. So here we go, another ascending triangle. The PMO, did a whipsaw here and is now heading back up as we haven't had the breakout yet, and we can see the volume on the OBV is starting to turn up. We don't have a scooter, like I said, but I think this is a fairly good setup. I would be a little bit cautious because we do have a low volume here. I didn't screen that out when I did some of these. So be aware and take a look at these charts and make sure, you know, you're aware of the volatility as well. This is a low price stock. So just, I wanted to mention that. And then the last one I have for you is, let's see, did we go through? Walgreens Boots Alliance. This one I am going to caution just a little bit because I do see a descending triangle here, and that usually means you're going to see a breakdown. However, we've come really close to that apex, and you know, if the triangle, the symmetrical triangle, any of these triangles, when it starts to get really close to the apex, breakouts aren't as significant to me because you could end up just sort of sailing through that overhead resistance of that declining top trend line. So, you know, you have to be careful of that. So I'm kind of ignoring that right now. But there are a few other things. You know, you do have a scooter that's not where you might want it. But I'm seeing rising bottoms here on the OBV. Would like to see some strong volume come in here on this breakout now of this declining tops trend line. And I also will a lot of times mention that if you have a bearish pattern, but you get a bullish result, that is something to consider as extra bullish, in my opinion. So, you know, this one does have the EMAs not necessarily set up right, but I think this one looks pretty good too. And now it's your turn, Tom. What you got?
Okay, well, I am going to look in the last time I did the momentum sleepers, almost everything I did dealt with retail because I really thought retail was just kind of waiting for something to go. And so this time I'm going to go with gambling stocks, also within consumer discretionary. This is a long-term chart of the Dow Jones U.S. Gambling Index. So this is a weekly chart. You can see off of the January 2016 lows, we've been in a very steady decline. We had a great start to the year, had a huge move really from October through January, and we have yet to get the breakout. So for me, a momentum sleeper is really, this is kind of the definition, something that had moved previously and now has just been kind of waiting. It's not really participating, so it's kind of lost. I think that this is a group that is going to make this breakout and sail through the 1,050, 1,060 area in time. So that's where this whole momentum sleeper started. Now, in order to actually find stocks, what I did is I always go into the scooters, and I like the small and mid cap stocks better. So if you go into the scooter reports, go into the mid cap, and then type in gambling, you can see here that these are the four stocks. One has a 96.8 scooter, which I really like. I think this is definitely a stock that I would consider. TSG. After a huge move up back in May, you can see it is breaking out. It has broken out, even though the group hasn't. So you got a relative leader. It's a small to mid-size, mid-size company, which I think is much more in favor than the large caps. And here you can see the sideways action trying to get through 38, but really we were about where we were a month ago. I think this one's going to make a breakout. So TSG is the first one that I have. Going back to that list, I actually like MLCO as well. When you look at the daily chart, there are some negatives. We broke down below the 20-day. We went up. We failed at the 20-day. We've come back down. The 20 is coming below the 50. So maybe things don't look that good. But we did break out from about the 29.50 area on heavy volume in April. And now we're back revisiting that level. And if you pull up a weekly chart and look at the longer-term weekly chart, this has been a very strong stock. 20-week moving average has served as pretty good support for about the last almost 3 years. Really since we broke above the 20-week moving average in September of 2016. So let's call it, well, maybe almost 2 years. But a huge move over the past 2 years and continuing to hold that rising 20-week. And that's right where we're sitting near this price support level. So MLCO, even though, again, it doesn't have a great-looking scooter, it's down a little bit further. I think this is one that could be consolidating before we move back to the upside. Let's switch it over to the small cap stocks for gambling. And CHDN I actually liked, but there wasn't much volume. So huge move up, great volume here, but still great volume for this stock is 200 to 400,000 shares. You know, recently, like today, only 28,000 shares. That bothers me, but I like the pattern. I like this pullback and maybe even a hammer going in here at support. But I'm going to stay away from that one just because of the because of the volume issue. Next up is El Dorado Resorts, ERI. I like this stock. I think we got a little bit of a negative divergence, but after moving up on huge volume in mid-May, you can see we broke above that high at about $42, and that $42 area has been holding. Today's low got as low as $42.45. I think this one could easily make a revisit to 46, and obviously if we get a breakout, could go much higher. So I like ERI on the selling here. And then my final one is Scientific Games, SGMS. Possible hammer going in here, but where I really like it, the recent breakouts at 54, that previous high in January is 56. Today's low came down into this zone between 54 and 56. I think that's a great area. This was a stock, printed a short-term double top up around 62, pulling back off of it, but I look for some buying coming in this 54 to 56 range. We may have already seen the bottom, although honestly, I'd like to see maybe a little bit more volume coming in on the selling and then get that reversal. But those are stocks that I think in the gambling area that could do well. Now, of course, I'm putting all my eggs in one basket here, just like I did with the retail stocks. If gambling stocks make a breakout, I should do really well with these picks. If they don't, maybe not so much. I wouldn't rush out and buy all 4 stocks, though. If you like one more than the other 3, then maybe take a shot with something like that. But here is your summary of the momentum sleepers. Erin gave you a handful there, 5 of them. This time I'm only going with 4 individual stocks. We'll see in a few weeks how we did.
Yes, yes, absolutely. And if we continue to do this well, I need to just make this my only method for finding stocks, because that I was pretty impressed with what we had before. And in fact, somebody in the chat room, Tom, is thanking you for a great call on TDOC. I guess it was at 42.47 and it got to 60.40.
Oh, I don't know when that one was. We've talked, we have so many different segments and all, but you're welcome. I wish I had it. Actually, I might have had this one for a little while. I probably got out at 46 right before it went up another $14.
Do you you don't ever use trailing stops, right?
Very rarely. No, I mean, if I'm not going to be around, like tomorrow, I'm not going to be around, I might consider at the end of the day doing something like that. I won't be looking at the market much tomorrow morning. Really throughout the day tomorrow, I'll be traveling. So that's about the only time, because I'm watching the market. I'm always checking my individual stocks, so it doesn't really make a whole lot of sense.
Yeah, I don't use trailing unless I'm seeing like a parabolic move, so I can protect myself from a price shock. Here you can see our weekly schedule for the rest of this week. Arthur Hill, like I said, will be co-hosting with me while you're gone, Tom, as you were mentioning. It's been a great show. I'm pretty happy with the momentum sleepers, and Bill is just has such great energy.
Yep, and I'm sure everyone is going to enjoy having Arthur on the show tomorrow. Just a tremendous technician, and he has a unique way of looking at the market. So I think you'll have a great show with Arthur, no doubt. I do want to thank everybody for stopping by. I hope everybody has a great weekend. I'm not going to be around tomorrow, but I hope you have a great weekend. As you exit today, would love to have you complete that survey if you don't mind. We'd love to get your feedback, hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everyone. Wishing you all a great weekend. I'll be back on Monday. Art will be here tomorrow with Erin. Happy trading.